Hi there, welcome to Kneppyinvests. Time for another September quarter Appendix 4C video. And in this episode, I'll be focusing on a company called Genetic Signatures. This company has seen some tailwinds because of COVID-19 and what they do. We did see, this business did see additional revenue, cash receipts come in because they do test kits, that sort of thing. But we've also seen a bit of headwinds also because the market did expect that to continue and we did see the share price under pressure. However, I do think there is a lot of tailwinds behind this company over the next 5 to 10 years. And once this little bit of negative sentiment around this company wanes away, I do think there is potential of a buy. I'm not sure when that would be, but I am paying close attention to the share price movement and to their Appendix 4Cs just to see how the business is progressing. It does look like the September quarter there were some positive signs in the September quarter, and hence why I decided to do a video on this company. Genetic Signatures is all about molecular diagnostics. That's the most important word here, diagnostics. They use their 3-base technology and have developed an easy screen test kit that simultaneously detects over 20 pathogens from one sample, including all the COVID variants. The company was founded in 2001 by Dr. Jeff Grigg. He was the ex-divisional head of CSIRO Biomolecular Engineering. I believe he passed away quite a few years ago, but he is a fairly significant name. And because he comes from CSIRO, I do have a lot of time for any scientist in that organization. Genetic Signatures listed on the ASX March 2015, so they have been around on the ASX for just over 6.5 years. And the current CEO is Dr. John Melky. Now, he's been with Genetic Signatures since 2003. And if I remember correctly, the Chief Scientific Officer has been with Genetic Signatures since 2001. So a lot of experience within management of this company. And John Melky has a 0.8% stake in this company. The major shareholder for Genetic Signatures is Asian Union Investments. They have over 25% ownership in this company. Now, I didn't do much research in Asian Union Investments, but the little research I did do led me down a completely different path than what I thought it was going to take me down. This is not really a union as per se. Now, the market cap of Genetic Signatures at $1.35 is only $195 million. They have a fair bit of cash as well on hand, so the enterprise value is much lower than that. And that's another reason why I am really following this company closely, because I do think the market cap right now is looking quite good value for the future potential this company has. And the ticker code for Genetic Signatures is GSS. Next door neighbours decided to start their mowing just as I began this video, so I closed the front door to keep out the mowing noise. Hopefully that couldn't be heard in the last portion of this video. Anyway, let's have a look at the financial year 21 numbers for Genetic Signatures and just compare that to financial year 20, keeping in mind the Genetic Signatures were benefited, their financials were benefited from COVID-19. Anyway, revenue did grow from 11.3 million to 28.3 million. That's a fairly large increase in revenue over a 1-year period. And if they could keep that going in the next few years, this company would be a screaming buy right now. Gross margins fairly high at over 60%. And the company is operational cash flow positive and profitable in financial year 21, improving from being negative. So operating cash flow from negative 2.1 million to positive 1.8 million, and unprofitable, loss-making 9.5 million in 2020 to profitable of 4.2 million in the last financial year. Have $30 million of net cash, so that does mean enterprise value is closer to 150 million than 200 million. And when you look at the PE ratio, seems a little bit high at 46.4, but that's on a low base, only 4.2 million of profit. They could easily double that or triple that without much effort. And the price to sales ratio is not too stretched at 6.9. So PE ratio looks fairly high. price to sales ratio looks fairly good for this type of company, particularly if they can continue the growth in revenue over the next few years. There are some questions about that, but I think there is that potential if we're talking long term, say 5 to 10 years, we will see significant growth in this company. Before we have a look at the most recent September quarter Appendix 4C for Genetics Cinches, just want to go back 1 year ago to the September quarter for the financial year 21, which means September quarter of 2020. So this would have been the first quarter of last financial year. I just want to see how they were doing this time last year and just compare how the company has progressed since then. Now, it's a bit tricky with this company because when we look at the cash receipts history, you'll see that this particular quarter, the first quarter of financial year 21, was their best quarter, and then things turned badly for the company in terms of cash receipts, but things have recovered in the most recent quarter. Anyway, in this quarter, $11.4 million of receipts, and they were operational cash flow positive by $3.5 million. So things were looking really good for this company back 1 year ago, and they did have a fair bit of cash 1 year ago as well. Finished this particular quarter with $33.2 million of cash. So let's have a look at the most recent September quarter just to see how the company has progressed, knowing that in between these two quarters, we did see the cash receipts fall quite a bit. This particular quarter was not quite as good as that quarter 1 year ago. Receipts a little bit down to $10.3 million. And we did see capital expenditure, $1.3 million. Administration costs were up $2.2 million. So fairly large increase in administration costs, and staff costs also increased by $300,000. Now, the reason why the company is almost just as operational cash flow positive for this quarter compared to the last quarter last year was because product manufacturing operating costs fell by $3.5 million. That is interesting. That did fall by quite a bit. But they were operational cash flow positive in this quarter by $3 million. And all that went to the bottom line. So they didn't spend any money in investing or financing activities. So the cash on hand increased from $30 million to $33 million. In their Appendix 4C, Genetic Signatures always includes this chart in their commentary. This is looking at quarterly revenue, not cash receipts. So revenue and cash receipts are a little bit different, just the way accounting treats them both. So fairly similar, but in the same sense, a little bit different. So you will always see revenue and cash receipts numbers will be a little bit different. And they're focusing on revenue here and just breaking down revenue quarter by quarter over the past 4 financial years. So the revenue in the most recent quarter was their record, and revenue for that quarter, $12.4 million, which beats the revenue from 1 year ago, which was $10.5. And you can see after that record-breaking quarter 1 year ago, $10.5 million of revenue, revenue did fall over the next 3 quarters, all the way down to $4.2 million, but it has recovered in the most recent quarter. So all eyes will be on Genetic Cinches over the next few quarters to see how revenue, cash receipts do proceed. If we see another drop in receipts, maybe this is the best quarter, that September quarter, the first quarter of the financial year. Maybe that is something this company experiences. But you can also see, just by looking at this particular table, that this company was benefited by COVID-19, and that should be exemplified and heightened when we look at the cash receipts history in the next slide. So let's have a look at that right now. I'll be fairly honest with you, before COVID-19, I wasn't following Genetic Signatures that closely. I was looking at their cash receipts history every single quarter, so putting down the cash receipts, but we didn't see any significant growth in receipts through time pre-COVID-19. And I am looking for companies that do see cash receipts growing. And before COVID-19, we were seeing cash receipts between $1 million and $1.5 million. And we saw those numbers for about 2.5 years. And then we saw in the June quarter 2020, as COVID-19 was running rampant throughout the world, receipts grew from 1.2 to 4.8 million, all because of their test kits. And then we saw that spike to 11.4 million in the September quarter of 2020, and then a drop, and now a recovery back in the most recent quarter. So significant spike in receipts since COVID-19. And the question is, can they continue this over the next year or so? They did mention, maybe in one of the commentaries for one of their reports, that they were having trouble in some markets pre-COVID. And because of COVID-19, they're finding entering into these markets a little bit simpler. So there is a possibility that COVID-19 overall has benefited this company because they are gaining traction in more markets with their test kits. Now let's have a look at Genetic Signature's weekly chart from when they listed way back in 2015, if I remember correctly. And not much happening for about the first two almost 3 years they were on the ASX. In fact, the share price was falling for a time then, and share price dropped as far as 25 cents. But there was a bit of a breakout during the middle of 2018, and that breakout continued all of the remaining of 2018 into the start of 2019. In fact, share price rose from about 30, well, in the 30 cents to a high of $1.30. So there was a little bit of hype in the market around this company, even though cash receipts weren't climbing. And just by looking at this chart, you can see that even though a lot of other companies on the ASX and around the world were seeing their share price significantly fall during the COVID-19 outbreak, that did not happen with Genetic Signatures. In fact, the share price went sideways, and then towards the end of March, start of April, we saw a massive jump in the share price. In fact, it climbed from $1.12 all the way to nearly $2 in a few weeks. And the share price rose as high as almost $3 by the start of July 2020. But the share price has been under strain ever since then, as the tailwinds behind COVID-19 have waned for this company. But I think that sometimes the market can overreact on both the upside and the downside. And it is getting to that point where I think the market is overreacting on the downside. And I'll talk about a particular share price I am looking at for a potential position with this company. And the very fact that the last September quarter for financial year 22 was a good quarter for this company that has put this company back onto my watch list, and I am following this company much closer than I was before the release of this Appendix 4C. So let's have a look at the daily chart, and I'll just show you a price point I am looking at and potentially taking a position with this company. As we turn our attention to Genetic Signature's daily chart, going back about 15 months to July 2020, when the share price reached its high of about $3 or just under $3 during the height of the euphoria around companies like Genetic Signatures. We have seen share price under pressure since then. In fact, the share price fell to a low of about $1.08 during May and June of this year. But it does look like that could be a double bottom and potentially the bottom in the share price for Genetic Signatures. If we do actually see the share price move back towards $1.08, test that support level, that could be a good position to take with this company, a low risk position, because if the share price then falls towards $1, that would be a sell. Now, even at those levels, I do think the valuation of this company would be looking attractive simply because of my long-term outlook for this company. I am fairly bullish about this company over the next 5 to 10 years. We just have to get through the short-term pain, short-term headwinds, because they had a lot of tailwinds behind them. And sometimes when a company has a lot of tailwinds, you will see a little bit of headwinds come in, pump on the brakes of the euphoria around the company. And that's what we've seen over the past year or so. And I just want to see a little bit of a turnaround in the sentiment, turnaround in the share price, preferably on some good financial news. That's the main thing I am waiting for now, is continued good financial news. If I see that in the next 2 quarters, that would be a good sign that Genetic Signatures has moved on from COVID-19 and they are finding their way through these, I'll say, short-term headwinds. But right now, if I do see the share price move towards $1.10, $1.08, I probably will take a small position, sort of as a bottom position. But if I do see some good financial news, some good outlooks from the company, a shift in sentiment, a change in the trend, I also might take a position at that if it's well above $1.08. And that's it for this September quarter Appendix 4C video for Genetic Signatures. If you have any questions about this company or any other company on the ASX, I'd love to hear your thoughts, your opinions, your questions. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need to seek financial advice, make sure you find someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.